Hi there, welcome to another Music Ally Focus with me, Music Ally's editor, Joe Sparrow. And this week we welcome as a special guest the journalist David Turner of the music industry newsletter and blog Penny Fractions, who will be talking in depth about the recent glut of investments into the music industry from non-traditional sources like alternative investment companies who've been paying billions of dollars at high multiples to snap up music catalogue. We wanted to know, why on earth are they suddenly doing this? David has some fascinating theories and brings some deep insight that has resulted from years of his own research. That's coming up shortly. Now, Music Ally provides an analysis-rich guide to the music business, and each Music Ally Focus episode analyzes one meaningful music business story at a time. This podcast will take about the same amount of time as it would take Duncan Lucas to fillet and portion 240 pounds of fish. He filleted and portioned a 40-pound fish in 4 minutes, 25 seconds in London in 2008. Now, talking of quickly gutting something, let's shift our attention over to these alternative investment companies that have started buying up music rights and bring our guest David Turner into the conversation. So we're thrilled to welcome David Turner to the Music Ally podcast. Hi, David.
Hello, it's great to be here today.
Thanks for joining us. We've been looking forward to having you on the podcast for a while. Now, David has been running for the last, I think, 5 years or so, Penny Fractions, which is a frank and forthright blog and newsletter documenting the modern digital music industry, which we're big fans of here at Music Ally. And his posts have actually made their way into Music Ally's own reporting and vice versa a number of times. So this is a meeting of minds. David is also a journalist who has previously written for a number of publications, including Music Business Worldwide, The New Yorker and Rolling Stone, and many more. He's also currently strategy manager for content and rights holders at SoundCloud, but let me make it very clear right now that his views in this podcast are in his personal Penny Fractions guise.
Yes.
Let's make that extremely clear. So thanks, David. Now, like I said, we thought it was high time to get you on the podcast. And around one specific issue, it's something that David's written about regularly, and it's one that we've also been analysing a lot. That is the new money that is pouring into the music industry in the form of giant alternative asset management companies like Blackstone and KKR, who are partnering with the likes of Hipgnosis and BMG to purchase music catalogue. And they're purchasing it at great expense, often paying over 20 times the annual incomes generated by these songs. And we've seen, David, acres and acres of excited headlines around the sales of Bob Dylan, Bruce Springsteen, John Legend. These huge purchases we've seen in the music business press and in the normal press as well. But one side of all of this billion-dollar excitement that's often not discussed are the ambitions of these new investors, this new money coming in. So these alternative asset management companies are enormous, and they're investing billions of dollars into music ownership. So we wanted to talk to David about why are they doing it? Are they suddenly interested in buying some cool rock songs for some reason? Have they run out of other places to invest their money in times of very low interest rates, or have they spotted that music is undervalued? So we invited David to talk about this. I'd like to point out at this point that Music Ally has reached out to some of these alternative asset management companies and invited them to be interviewed, but so far we've not been able to arrange it. However, they will always receive a very warm welcome here on the podcast if they change their minds, and I encourage them to get in touch to put their side across. So David, you're kindly here to add your thoughts on what their long game might be, and also what the implications might be for music, the industry at large, and for artists and songwriters, of course, which is the central group of people here. So first of all, perhaps we can get your sort of very top-level feelings on what these new investments mean and what questions they raise for the industry and the people in it.
Yeah, so I want to say, one, thank you again for having me on today. So I think that these investments are sort of driven by sort of a number of the factors that you previously mentioned. One, it being sort of, broadly speaking, sort of the low interest rates over the last number of years. I would say, obviously, right now in the United States and also in various parts of Europe, there is sort of the threat of sort of central banks raising interest rates, so that could have a potential impact on this market. There is also just the growth of streaming, which I think in many ways, streaming, a lot of this can be sort of tied to the growth of streaming. I was actually reading an article from I think maybe over a decade ago, it was either Roundhill or Primary Wave, which are two sort of like slightly older players in the space, where a couple of folks there were actually pointing to iTunes sales as being a great indicator of some of stuff that you could be potentially purchasing, because they sort of saw that you could just follow the iTunes charts and sort of see, oh, a song is rising on the iTunes charts. Who owns the publishing to that? And we're like, oh, let's maybe a good way to sort of like eyeball it. So if there was already sort of interest in that along something like iTunes, streaming over the last few years as revenues have been increasing, has been a great additional way to try to identify potential catalogs and identify potential artists to sort of work with. So that's it. So I think those are sort of some of the top initial reasons. And then I think the other reason is that these assets are not all clearly owned by major labels. I think one of the things that is sort of interesting about this space is that in publishing, in, at least in, again, the United States and the UK and a number of parts of Europe, is still highly centralized, and that there are a number of big players in the space, but it isn't as centralized as the reporting side of the business. So there is a lot more opportunity for these companies to sort of come in and sort of throw their weight around and throw around their cash.
And in terms of the rationale of these investment companies, their job is to find alternative investments, right? So this is what they're doing.
Yes.
And they've clearly identified music as possibilities for this. And like you said, they've been doing it for a while. But why is there this momentum right now? Why are we seeing just as we've been speaking, I've seen emails coming in about catalog purchases. So why now?
So why right now? I think that there's, at least again, according to sort of reporting in places like Billboard, I think sometimes folks sort of associated with sort of various tax changes in either the United States or the UK may being a reason. I think honestly, one of the big reasons is just sort of the momentum sort of going forward. So if you were to actually sort of look over sort of the long arc of catalog purchases over the last 2 decades, you'll sort of see a really big blip start occurring around 2016, 2017. That is really when, if you start looking at sort of the number of public purchases, that's when they start sort of like rising really almost exponentially at the moment, even in coming into 2022. I think by this point in 2022, we're only a month into the year, but we're already probably on track for like a record number of these publicly seen purchases. So I think that it's just over the last 5 years, it's sort of that as new companies continue to sort of move in the space and as it becomes more and more headlines are being grabbed, I think it's kind of creating a sort of virtuous cycle where someone sees that Bob Dylan sells his catalog, that tips off another songwriter, and that tips off another set of lawyers, that tips off another set of investors, and that everyone sort of starts eyeing it. And it's kind of a little bit sort of a gold rush sort of phenomenon right now, where everyone's trying to get the next headline and trying to get sort of the next big deal. And I think that's kind of where we're sort of at right now. And then, as what I said earlier about there sort of being generally very low interest rates, this is also a time when there's a lot of money being moved around. Obviously, during the pandemic, a lot of central banks and a lot of governments pumped a lot of money into the economies of across the globe. So there is sort of a lot of money sort of sloshing around. And these particular assets seem to be one of the classes that are sort of benefiting, along with things like technology stocks or cryptocurrencies as well.
What do you think the long or medium term ambitions are for these investors? Because this is new money into the industry from new participants who view money and the power that comes with money very differently. Yeah. The music industry has generally sort of taken care of its own purchases and money, and sort of it's stayed internal. And now this is big outside money coming in. So what does that mean in terms of their medium and long-term ambitions for the investors? And are there any questions you'd like answered that you're not sure about?
So there are a number of questions I'd like to ask. So to your point earlier about trying to invite them on, I would love to sort of hear more of them speak in their own words. So I would at least say, as far as I'm looking at it on the medium term, I think that in the medium term, these are probably solid investments. I think one of the things that's sometimes a bit hard for folks in music to kind of wrap their heads around is that when you see sort of 10-year projections from different banks like Goldman Sachs, they are really bullish on the long-term prospects of music. They may say that they may see sort of slowdowns and sort of like streaming growth over time, but they're really excited by the fact that streaming companies are working with the Facebooks, TikTok, and other sort of tech platforms to bring in additional forms of revenue. They're excited by the ability to have more sync deals with companies like Netflix or Disney. So there's like a lot of opportunities for money to still be flowing into music in a way that I think is just not how the industry has traditionally been set up over like the last century when it came to sort of like record sales and things like that. So I think because of that, I think a lot of these sort of investors sort of that we're still kind of in the early stages of this big shift into digital and what that could actually sort of mean as far as sort of the value of these assets over time. Longer term, I think that this is sort of interesting because we have such big institutional players in this space, and because many of them are actually now trying to partner up with actual labels rather than sort of trying to take on the full. So let's say, for example, so Blackstone has a partnership with Hipgnosis. Blackstone is not themselves interested in trying to become a music publisher in that kind of manner, even though they do have some ownership of like CSAC and sort of other parts of that music ecosystem. But they themselves, or BlackRock, who has a partnership with Primary Wave, are not interested in trying to sort of become the next universal music publishing group. Doesn't seem to be the real end game here. It is much more to sort of still be in on the higher tier catalog, which they know are going to have these returns. And if you sort of see that overall the next 10 years that music revenue should be increasing, you can probably, they will be probably making efforts to make it so Bob Dylan, Bruce Springsteen, and David Bowie and the likes of those are the artists who were prosperous in the old system and will continue to be prosperous in this new one as well.
So one argument is that these investors have somehow spotted what the music industry couldn't, which is that this music is undervalued. Is it?
I think yes. To be truthful, I think they did sort of spot something that other folks in the music industry just weren't. I don't want to say weren't aware of, because it'd be sort of disingenuous to say that Sony, Universal, Warner, and all the other big publishers weren't aware of these assets. They weren't like they were just handing these away for free or anything like that. But they weren't like selling these like for pennies on the dollar or anything like that. So they were not unaware of the value. But I do think that these investors are sort of seeing the longer term horizon of this in a way that a traditional publisher might not, because for a traditional publisher, publishing isn't the sort of sexy business of the record industry. It hasn't been, I think, since maybe the early 20th century. It hasn't been the sexy part of the industry. So when you're sort of an executive at one of those companies, you're sort of looking at the growth of streaming hitting the recording side really intensely, and you're really excited by that. You're really excited by the money coming in on the recording side, that you kind of see publishing revenue slightly increasing over time, but you're not as maybe like jazzed about sort of the publishing side of your business as you are the recording side. Where these alternative investment companies and sort of private equity firms as well are excited by that, because they aren't really as interested in sort of the recording side of it, just like overall. They are not trying to go to concerts, not trying to do all of that kind of like the stuff that for us on the music industry side, the fun stuff, I feel like in a way, they may not be as like invested in some of that, but instead they're happy to see that, hey, you're telling me that over the next 10 to 15 years, this asset, if it were to stay neutral, would probably continue to grow. And you're now telling me that they have potential ways to make money from some of the biggest companies in the world, be it a Google, be it an Amazon, be it a Facebook. That's really exciting. That'd be a really exciting proposition to make, where you're like, we expect this to increase over time, broadly speaking, and there are at least 3 or 4 other additional avenues of potential new revenue that is being opened up. It's kind of hard to not see sort of the benefits of that. And even on the record industry side, I think this has been reported in Music Biz Worldwide, is that I think Warner described as like other revenue sources is just now starting to come online. The like Roblox deals, the Fortnite of deals. Yeah. These are all very, very new. So I think for these asset managers, it's like, if we can get in now, we don't need to figure out the deals with the Fortnites and the whatevers. That's what the other part of the industry will do, but they can still benefit from it and see sort of the revenue returns from it pretty smoothly.
It's clear that things like fitness and the metaverse are going to plug into music, and music's going to plug into them in ways that's going to bring revenue in. And there will be more things in the future, especially as the I know the metaverse is a catch-all for sort of tech opportunities at the moment, but it's clearly going to plug in various different ways and bring in money. We've talked a bit there about investment in music. Let's talk about music for a second, which is right at the center of all this. We're talking about, so, like you said, it's really about, they're looking at that top tranche of songs, the big hits, Queen, yes, and Bob Dylan, but also kind of individual songs like Ice Ice Baby. But does this mean that from an artist perspective, we're going to see a sort of separation into sort of super songs that create tons of dough. And then there's this sort of like other section beneath that for other artists. And what does that mean if there is this kind of like sort of, if you like, sort of top stream of intensely lucrative songs that could be 20 or 30 years old? I mean, does it mean that they're going to lose opportunities if there's a strong incentive to crowbar these quote-unquote valuable songs into sync deals and into... What does that mean in terms of for musicians and artists?
Yes, so I think that there are a couple different angles on this I'd like to sort of approach. So on one end, I do think that there will probably be this bifurcation that you're describing of sort of the top songs by the top artists being the ones that end up being pulled apart into movie trailers, appearing in your favorite Netflix series, and then also maybe, appearing in like a Prius ad or something kind of like that. I think you're good. Again, those are not, anyone listening, like that doesn't sound all that different than what already happened today. I would say that is probably the case, where maybe it's the Hipgnosis Blackstone songs that end up getting a little bit more shine than like maybe a Domino or a 4AD who may have gotten an opportunity like that 20 years ago, when a number of smaller labels actually got a lot of purchase and a lot of traction via sync deals and stuff like that. So I do think that there's a very strong possibility that this move, as these investment firms in these companies want to see strong returns on their songs they're purchasing, try to get the fight a little bit more to try to get that pie. Now, the inverse of this, just I guess also a little bit of a happier side of this as well, is that there is a lot of push right now in the UK especially, but also in the United States, to try to get songwriters paid more, to try to sort of get more equitable payments for artists and musicians. And I think it's sort of a interesting sort of duality of interest groups here, where like very realistically over the next coming years, you might see like musician unions and Hipgnosis fighting the same fight, where they're both sort of going like, hey, like us as songwriters and then Hipgnosis, the songs we own, we feel they are being undervalued by the sort of streaming platform, or in some instances, maybe wanting the labels to sort of take less on the recording side and more on the publishing. I think that there's sort of an interesting bedfellow here, where like in that scenario, the average musician, if they were sort of to see that like overall the amount of money paid on publishing goes up across the board, that helps all artists actually, even if it would be to the benefit of sort of these Blackstone and BlackRocks as well. It's kind of a double-edged sword in a way of the way that the market is sort of going, where there may be actual very real opportunity for the average musician to get paid more and to get better monetary outcomes down the line, but it also may be that they are losing out on other opportunities down the road as well.
And just to step in here, if you're finding this useful and you would like more of this kind of in-depth news and trusted analysis waiting for you in your inbox every morning, head on over to musically.com/subscribe. Indie labels, artist managers, employees of CMOs or publishers might be eligible for one of our sponsored complimentary subscriptions as well. Okay, let's go back to David. Talking about Hipgnosis, Merck Mercuriadis, the founder of Hipgnosis, is quite open, saying that his ambition is for songwriters to get a bigger share of streaming royalties. And of course, that split is between songwriting and recording is very out of balance at the moment in percentage terms, which obviously makes sense given his business model. But yes, that rising tide could lift all of the songwriting ships. But do you think that there's a potential chilling effect if we set the value in let's say Queen songs, or some songs that are from the late 1970s, that sort of that era of music that is getting, they've been around for a long time, so they're part of our culture, and then they culturally get adopted again, and then because of the sort of amazing international dissemination effect of social media, it sets them as sort of, they become popular because of what they stand for as much as what the songs are. So, okay, we can argue whether they're good songs or not, but they definitely connect to people and they have a certain meaning. So, a certain Queen song means this in this context, and it becomes almost mimetic. It becomes a sort of a touchstone for, this song means something's about to happen, and here's "We Will Rock You" by Queen. So, in a trailer for a movie, for a superhero movie or something. So we're talking quite long term here. But does this have a chilling effect on the opportunities of artists who are creating equally impactful music now who perhaps they're making a song as good as We Will Rock You by Queen that has the same kind of impact, but they're not going to get the opportunity to not only create the money, but hit the audience and reach that cultural touchstone point.
Yes, I do think that this could have, I think this could, and I actually wouldn't say, many ways say this is already having a chilling effect on this. So one thing that a friend of mine was recently at the movies, and she was telling me how all the songs that she kept hearing in trailers just sort of felt like covers. And one in particular, she sort of looked it up. She also works in music, so I guess this is I don't think an average listener, an average moviegoer is thinking this, but she works in music, and she like looked at this trailer and was like, this seems a little odd. And then she looked up the song, realized the song was written by someone whose publishing is now owned by Hipgnosis. And it was like, okay, that kind of makes sense there. Did a little more digging and saw a little bit more connections between the film and the song rights. So I do think that is already starting to happen. And I do think that it is like an opportunity that could potentially be lost for smaller musicians and up and coming musicians. And I think that is a very real concern. I think there's one of those things where it's kind of a little hard to figure out like what it is beyond sort of the hypothesis we have now. Like we think that this may happen. And until there's probably more additional research, more time can sort of go before we can sort of make a proclamation that we've lost getting new music in trailers or in TV shows or anything like that. But I do think it is a concern that is like worth raising and definitely worth sort of like thinking through, even though I think it's a little hard, I guess, like personally to me to distinguish between like how much of this was a market already dominated by major publishers versus sort of these newer firms that are also sort of coming into the place as well. I think one of the things that, again, with these top tier artists, I think we'll probably end up getting a lot more of the biopic, like TV show, retelling of artists' lives, stuff akin to the Beatles documentary that Disney Plus put out. I think like we'll probably get more things along those lines of sort of the reintroduction of a lot of these artists and sort of like the reestablishment of their sort of like cultural importance than maybe the same like flattening effect across all of like sort of like syncs and stuff like that. Even though if someone on the sync side has already sort of saying this, I would also be open to hearing that as well.
Yeah. And let's look back to the sort of slightly longer term play from a financial perspective. Again, these alternative investment companies are used to wielding vast power, not in terms of just buying stuff, but political power, but with the political power that comes with that money. And one concept I've read is that one sort of longer term idea is to buy up a lot of catalogue and buy up a lot of copyrights and then use that as justification and say, look, these create revenue, they're important, they're culturally important, so we need to extend the copyright longer for those reasons so that we can keep creating money and that's good for everybody. And I've seen even headlines sort of saying perpetual copyright. So there's many more decades of time to collect royalties, and then instantly that these big investments become incredibly valuable and great returns. Do you think that is something of possibility? I
guess like part of me feels that, yes, I think that is a possibility. I assume that is probably something that folks are probably sort of thinking about in the longer time horizon. I think personally, I look towards companies like Disney that are already and have been in the IP game for well over a century and been like trying to assert laws to their benefit for a number of years now. I think I kind of look a little bit more towards what they are doing and other larger media firms have been doing as sort of being more leading indicators of that than what is sort of happening right now in the song investment space. I think the song investment space probably more than likely will be following that rather than sort of leading those potential changes going forward. That's at least my view. I would not, if there's someone that could sort of show or like have evidence of them like hacking away at legislation across the Atlantic to sort of say like, we want this new copyright regime led by Blackstone or BlackRock in this way, I would take it up. But I think that there are plenty of other firms in entertainment and media that have much more immediate sort of bottom line interest to sort of see those kinds of changes happening before the sort of like David Bowie's songs may eventually sort of like change in ownership or things like that over the next few decades down the line.
It doesn't even need to be a hugely radical change. They could make some minor changes, and if that increases the income by 5% every year, then their investment is solid immediately. Yes. So it could even be not even as dramatic as perpetual copyright. It could be incremental.
Yes, and I think that's the thing, as I was saying sort of earlier about this overall space, is that if there was not sort of the influx of sync deals and other opportunities, and you were just sort of looking at the impact of streaming on publishing, these would probably be perfectly fine investments to make. I don't know if they would be quite getting the high monetary amounts and the billions of dollars being raised, but I do think they would probably be like solid investments that plenty of folks would say, hey, that makes enough sense to try to get into. But it's because of the additional money coming in from tech and these other sort of resources that I think is sort of why things are sort of like ballooning, or one of the reasons why it's ballooning. And I agree that like they probably don't need to make drastic changes to sort of make this worthwhile. There are already plenty enough factors in it to make it sort of worth their while right now.
To start to sort of sum up in that sort of overview sense, does anything about this land grab concern you? And I'm not saying the money is bad, and because these they're buying and selling legitimate items, right? But does anything concern you about this? Is as a music fan, as someone who works in the industry, does anything concern you?
So I think the main thing that concerns me is mostly just the consolidation of these rights and the fact that it seems increasingly. I guess when I see a company like PIMCO have a deal with BMG, or when I see Hipgnosis having a deal with Blackstone, or when I see some of these, or I guess Eldridge, I think it's Eldridge Capital who's been helping finance deals with Sony. I think it's when I sort of see the like intense intertwining of these larger investors and sort of the already established players, it's where I kind of start getting more concerned, because at that point it sort of shows me that, let's say if there was a new up-and-coming publisher, let's say there was a great new publisher that had sort of an end to a new kind of genre that's sort of blowing up, and over the next 20 years becomes like the next equivalent of like rap or dance music in like the late 20th century. Like, I'd be concerned because that publisher is going to be facing a lot of pressure from all the other players in the market to either sell, to try to like not have as much potential sway as they could. So I do kind of feel concerned that it's going to have sort of a chilling effect on just even new people coming into the space who don't have this kind of financial backing, which I think is sort of what you were sort of saying earlier about the potential chilling effect on just the art that we're even sort of hearing. So I guess like in a way, I do sort of agree with that there is a potential chilling effect of like, hey, I'm a new player in this space, but I kind of see there's a real limit or ceiling to what I'm able to actually achieve and be able to do here.
Yeah, which I mean, whether you look at that from a business or artistic perspective would be a shame. Finally, then, this I guess this is the most complicated question I'm going to ask you, but also the most open, which is as you look ahead, what's your main? I hesitate to use the word prediction, but where do you see this is going to go in let's say in the next year or 2 years in terms of activity? Landmarks. What do you think's happening next?
I guess the thing that I'm actually looking towards, or I guess there are a couple things. One is I have and if folks who read my newsletter, you can catch me writing a lot about this. I'm very keen to see like what happens on the legislative side around issues with paying of artists in the UK and the United States. I think if there is any major moves there, suddenly some of these catalogs could potentially have been like, they got them on the cheap potentially. Like that's something to be very like realistic about. Like if there is the kind of reforms that are being thrown around in both countries, all of a sudden some of these purchases were actually like pretty good deals when all of a sudden the balance of power shifts back to the songwriter. So I'm like very keen to keep an eye out for that. And then the other thing that I'm, I guess, a little bit more less keen on, because now sort of seeing the deals again with like a PIMCO coming in with BMG or sort of other bigger ones like that, is I've been very curious to see if there ends up being purchases of catalog that have been recently purchased. So I guess I've been a little bit curious to see if it's a catalog that went for like 100 million gets bought for like 200 million by someone else or something like that. Where all of a sudden it's like, oh, where even the people that are sort of like skeptical of the numbers are like, that seems like a little too high. I think right now everyone's sort of, I think a few years ago, there's a lot more skepticism around this business. I mean, if you read the early stories around Hipgnosis, there's a lot of skepticism around what Merck was doing. That has sort of tempered over the last couple of years, especially the last year or so, has tempered a lot. So I'm always trying to keep an eye out if there's any deal that sort of like raises people's red flags again to say, hey, maybe this market is getting actually a little too hot. I don't think right now we're at that stage. I think right now we're at a very hot stage. Like there are billions of dollars flowing into this space. So it's obviously very hot. but I don't think we're quite at the stage where I'd be like, oh, that was probably a bad deal, or like someone overspent and they're not going to be able to make that back, even if like all the chips fall in the direction.
Yes, the concept of flipping, and even maybe perhaps consolidating catalog and then splitting that into tranches and saying, okay, of our catalog, we've merged all this, and now you can invest in these 10 like really top tier songs. And it's going to be interesting to see if those are then sold or perhaps even monetized as kind of securities in some way. I mean, we're sort of, I'm not saying we're drifting towards a sort of like the 2008 banking crisis of music, but there are things that could be done here that could be extremely interesting or catch people out.
Yes, I would say one of the upsides of, especially for folks who are in the industry and folks who are like deeply involved with this day to day, I think that you would be able to identify some of those like markers of concern pretty early on, I would say. Just for this example, there's been a lot of good reporting and eyeballing of streaming growth, or sort of like the slowing of streaming growth in more mature markets. So I do think that there is sort of a pretty good industry-wide sense that like no one thinks that we're going to get to 100% of people in a country paying for a streaming platform. No one sort of would assume that or believe that. But as the numbers get higher, that's where you start looking for other sources of revenue. And so I think that overall in the industry, I think that we have enough runway and enough sort of like people keeping an eye on all these things that there won't be sort of a flip of the switch where it's like, oh, wait, the revenues aren't hitting quite at the way that we were expecting to. At least not, again, in the next few, like 3 to 5 years, I don't see that happening. Maybe 10 to 15 as all these new markets sort of mature, as sort of these new revenue streams also kind of mature, there may be more questions around how much money should be spent on these things in maybe 2030. But in 2022 right now, I still see there's a pretty wide runway for the folks investing at this and for the artists themselves to be making quite a bit of money down the line.
Thanks ever so much, David. Really fascinating to hear that from you, and with such precise views like that. And I'm very grateful. How can people listening follow your work on penny fractions?
Yes, so the best way is just to type in penny fractions into Google. You'll still come across my newsletter right there. And if you're also interested, you can follow penny fractions at pennyfractions on twitter.com. I don't post a lot there, but you can just sort of see my most recent my most recent newsletters there as well. And also, if you want to reach out to me, you can email me at pennyfractions@gmail.com.
We'll put those links somewhere around the podcast so you can just click straight through to them. David Turner, thanks ever so much. It's been a pleasure. And, we hope to have you on again sometime soon.
I'm going to say thank you so much for having me on today.
So huge thanks again to David Turner from Penny Fractions for shining some light on that complicated issue. Hopefully we'll have him back in the future as well. And if you found that podcast useful, please share it on with someone else who you think will find it equally useful. And if you'd like to get in touch with me about it, if you are, for instance, from an alternative investment company and would like to put your side of the story across, please do email me. It's joe@musically.com. We also have a free weekly email called The Knowledge, which rounds up all of the best analysis, news, marketing insight, and skills from all of Music Ally's services. There's a link below the podcast, so sign up, and frankly, it will make you a better person. And that's it. Thank you for joining us as ever. Until next time, from me, Joe Sparrow, farewell.